You know, while most of the world is focused on big headlines, wars, geopolitics, and global tensions, there's something else happening quietly in the background. And honestly, it might end up having even bigger long-term consequences. It's not loud. It's not dramatic. There are no official announcements. But across different parts of the world, people seem to be slowly stepping back from the United States, not through speeches or policies, but through everyday choices. So the real question is there a global boycott building against the U.S.? Let's break it down. So first, let's look at the bigger picture. Despite repeated claims by Donald Trump that the United States is doing extremely well and remains the hottest country in the world, recent data suggests something quite different is happening beneath the surface. We're seeing a noticeable drop in international tourism. At the same time, consumer behavior is shifting. People in different countries are starting to avoid American products. And this isn't limited to one region. We're talking about Europe, Canada, Australia, and even parts of Asia. Now, individually, these changes might not seem like a big deal, but when you put them together, they start forming a pattern, and that pattern is hard to ignore. Let's start with travel, because that's one of the clearest indicators. In 2025, international visits to the United States dropped by about 5.7%. Now, that might not sound huge at first, but here's the important part. Global tourism overall was actually increasing during that same period. So while the rest of the world was traveling more, fewer people were choosing to visit the U.S. When you break it down by region, the numbers become even more interesting. Travel from Europe dropped by around 17%. In some countries, it was even higher than that. From Australia, visits declined by roughly 7%, and the trend has continued into 2026. But the biggest shift comes from Canada. Travel from Canada to the United States has dropped by over 30% compared to previous years. That's not just a small dip, that's a major change in behavior. And it suggests something important. People aren't just traveling less, they're choosing different destinations. Now, let's talk about consumer behavior, because this is where things get even more interesting. Across several European countries, surveys show that a large percentage of consumers are actively avoiding American-made products. In some places, that number is around 50%. In others, it goes above 60%. Think about that for a second. That's not just a preference. That's a conscious decision. And when millions of people start making that same decision, it begins to impact entire industries. One of the biggest examples of this is the American alcohol industry. Exports of American whiskey to the European Union dropped by about 35%. That's a huge decline for a product that has traditionally been very popular overseas. In countries like Sweden and Denmark, the trend is even more visible. Sales of American wine and spirits have dropped significantly, and in some cases, retailers have even removed U.S. products entirely from their shelves. Now move over to Canada, and the impact becomes even more dramatic. American wine exports to Canada fell by nearly 80% in a single year. Let that sink in, 80%. Spirits exports also dropped sharply, with declines reaching up to 85% during certain periods. This isn't just a market fluctuation. It's a serious economic hit. So what's driving all of this? Well, in Canada's case, politics seems to be playing a major role. Tensions increased after trade disputes and tariffs introduced during Donald Trump's leadership. On top of that, some of Trump's comments, like referring to Canada as the 51st state, didn't sit well with many Canadians. The result? A strong public reaction. We've seen growing support for boycotts of American goods, along with a noticeable decline in travel to the U.S. At the same time, Canada has started expanding its trade relationships with other countries. In simple terms, Canada is slowly reducing its reliance on the United States. And that's a big deal, considering how closely connected the two countries have been historically. Now let's look at Asia, where the situation is slightly different but still connected. Here, it's not just consumers, it's also government policies influencing the shift. For example, exports of American whiskey to Japan have dropped significantly. At one point, Japan was one of the fastest growing markets for U.S. spirits, but now that growth has slowed down. In South Korea, public opinion toward the United States has also declined sharply. Surveys show a major drop in favorability, which suggests a deeper change in perception. So once again, we're seeing the same pattern, a gradual move away from the U.S., both economically and socially. And then there's one of the most talked about companies in the world right now, Tesla. Tesla has been a major player in the global electric vehicle market, but recently, it's been facing challenges in multiple regions. In Europe, Tesla's sales have dropped significantly, even though the overall electric vehicle market is growing. That's the key detail. The demand for EVs is increasing, but Tesla's share of that market is shrinking. In countries like France and Norway, the decline has been particularly sharp. In Canada, Tesla sales have also taken a major hit, with significant drops compared to previous years. Some analysts believe this is partly linked to Elon Musk's political positioning and his association with certain political figures and movements. Whether that's the main reason or not, the result is clear. Consumer perception is changing and it's affecting the brand. Now here's the important question. What does all of this actually mean? Is this a coordinated global boycott? Not really. There's no single organization or movement controlling all of this. Instead, it looks more like a collection of individual decisions happening at the same time. People choosing not to travel to the U.S. People choosing not to buy American products. Countries choosing to diversify their trade partnerships. On their own, these decisions might seem small, but together, they create a powerful shift. And honestly, this is where it gets interesting. Because this doesn't feel like a temporary reaction. It feels more like a long-term change in perception. When people start changing habits, where they travel, what they buy, which brand they trust, those habits don't always go back to normal quickly. They can stick. And if that happens on a global scale, the impact could be significant, not just economically, but also politically and strategically. Now, just to keep things balanced, this doesn't mean the U.S. is collapsing or losing its global position overnight. The United States is still one of the largest and most influential economies in the world. But what it does suggest is that something is shifting, something subtle but important. And in many cases, these quiet shifts are the ones that matter the most over time. So to sum it all up, we're seeing declining tourism from key regions. We're seeing consumers actively avoiding American products. We're seeing major industries like alcohol taking a hit. We're seeing countries like Canada adjusting their economic strategies. And we're even seeing global brands like Tesla facing growing resistance. Individually, these might look like separate issues, but together, they point toward a larger trend. A slow, quiet shift in how the world is engaging with the United States. So now the question comes to you. Do you think this is a real long-term change? Or is it just a temporary reaction to politics and global tensions? Let me know what you think.